Good morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right, welcome back to Insurance Matchmaking. Last week, I talked a lot about Medicare things and did touch on a couple things. They do affect the under 65 market, like the hospital indemnity plans, the Canadian Med Store. Those are things that can be taken advantage of also by the under 65 market. I am going to talk more about marketplace stuff today. But one thing I didn't mention last week about the Canadian Med Store is you can contact me and I can help get you, pointed in that direction. But, if you Google Canadian Med Store, their actual website is Drugstore Unlimited. But if you Google Canadian Med Store, it should take you to the same place. You get what they call concierge service. If you call them, they'll figure out what you need to do. And basically, is you'll fill out kind of like a membership application, as I say application, but it's just, so they get your personal data to, for billing purposes and such. But you have to provide them with a legitimate prescription. You can't just go, I want to buy Xarelto from Canada, and they'll order it for you. You still have to, the Canadian pharmacist is not going to send it if you don't have a valid prescription for it. So you do have to have the prescription. But, again, you might not have insurance, or if you have insurance, it's not covering that well. But the point I was making on that, get the contact information. I have a contact there named Amber, and I can get you her contact information. But even if you just Google it and call them up on your own, do me a favor and tell them that you heard Matt Libby say that they should contact them. They do, send me a small, commission for referring people to them. So, they are a business, we're in business, so we cooperate with each other. And again, I send people because I want my clients to save. And it's not going to, again, it's kind of like the commission I get on the plans you buy. You're not paying a different rate for your Medicare or your health plan because you used me as your agent to enroll you in that plan. The cost is going to be the same. And that's the same thing with the prescription. Because if they pay me a referral, they're not going to charge you differently. That's something that's already kind of built into their process, that they know they're going to pay out commission. That's the way the insurance companies do. They know they're going to pay a commission on certain things, so they just figure that into the cost. In whether they're paying a commission on it or not, you're still paying the same cost. So, and there's links on my website also to get you to the Canadian Med Store. But I wanted to talk about the under 65, especially marketplace insurance right now. One thing before I get into that, I did want to mention, you do hear the commercials on this radio station. You did when it was, News Talk, and now it is also. Now it's the Christian Grace 107.7, but you still, especially because it's on Grace, you hear the Medishare commercials. I am a representative now for Medishare. So if you're not going to use the healthcare marketplace, or even if you got a tax credit, it's not substantial enough to really lower the cost, you might be interested in using something like Medishare. Now, there's two stipulations that are going to come into play for those that want to use Medishare. Is you do have to sign a statement of a profession of faith that you accept their faith standards and be a Christian. It's kind of funny. It's like, if you're Jewish, sorry, you're not going to be able to participate this, because you generally are probably not going to sign that statement because you don't agree with Christian beliefs. So you can be a good person of faith, but the Christian health sharing is going to be for Christians only. That's something they're legally able to do. The other is they do not allow you to use tobacco products. So you're not saying you can't be a Christian and use tobacco, but they're not going to accept you into their program because they want to promote that healthy lifestyle. So those are the two main stipulations that I have run into with people that, maybe they're agnostic and they're not going to sign that Christian statement of faith, or they've used tobacco and it's used tobacco in the last 12 months. So if you quit 6 months ago, wait another 6 months and then we can talk about Medishare. It's not going to be available until you've fulfilled that 12 months of not using tobacco. The other thing with those plans, and I'm not supposed to use the word plans, but the membership with a Medishare is not going to turn you down for a pre-existing condition, but anything that you've been diagnosed with, or received treatment for in the last 3 years will not be shared with the other members. Now, after 3 years, it could start being shared, but it has to be 3 years from once you started your membership. And the same thing kind of like with maternity. They're not going to help you with maternity if they won't turn you down, but they're not going to share your prenatal costs if, say, you're 6 months pregnant. They actually, for those type things to be shared, it has to be 10 months after you signed up. And that's the same thing with disability plans, that if they're going to pay anything for childbirth or maternity leave, you had to have had the policy at least 10 months. That way they know you weren't pregnant when you got the plan. And that's typical with any insurance type thing when it has to do with maternity. So that being said, I've mentioned in last week's show that, this is kind of my slower time of the year, but I'm still getting people coming to me and asking about help with health insurance. I had a recent member who's a client that's a RN and went to PRN status, which means, if you're in the medical field, you know what I'm talking about. The term that they use, it's a medical term, but they use it also to work in conjunction with working part-time. And so most medical professionals who work at the hospital or a hospital have medical benefits. But when they go PRN, they're not full-time anymore, and they're not eligible for those benefits. So I do get people like that every once in a while that will ask for my help with health insurance, and we can get you through the marketplace. There has been a change in rules as of the 16th of I started to say the 16th of June, the 16th of May, that we can still enroll people, but we can't just sign an attestation that the individual has recently lost or is about to lose coverage. We have to be able to submit the proof. And so that's what happened with the individual. I needed to get a letter stating that the coverage was ending. The good news is the marketplace will backdate it, because in this case, I got the paperwork on the 1st of June and I actually did submit it for them, even though that was a Sunday. I got the form in the email. I sent it in because it takes some time to get those things processed. Now, you have insurance as of the 1st, but no claims are going to get paid until you've been approved through the marketplace to the insurance carrier and you've paid your first month's premium. So you're covered in an emergency, but you won't be able to get certain things claimed. So you're not going to be able to go to the pharmacy and get a prescription filled. Now, a doctor will probably still see you, and of course, if you have an emergency and go to the hospital, those kind of things, that's going to happen. You're going to get taken care of, but they'll probably bill you directly because it's not in the insurance. Or once you get your insurance, you should be able to go back to whoever the provider was, give them, show them your ID card, and it's going to show the effective date back to, in this case, the 1st of June, and ask them to resubmit it. And they usually will do that. It's not that difficult for them to submit that because they hadn't submitted it previously to the insurance company. Or you may have to take the bill, send it to the insurance company, say, hey, I got this bill because I didn't have. So those are some drawbacks. So the reason I'm bringing that up is we can get you insurance. We can still enroll you as of the last day of the month to get enrolled. So like in this other person's case, I got them enrolled in time. If they'd had the proof of loss of coverage at the time I did the application, everything probably would have processed kind of normally versus being on hold waiting for that proof. So we can still do, because the way the marketplace works, and pretty much most health insurance are going to work this way, is whenever you apply for it, it's going to take effect the 1st of the next month. Now, one of the things with loss of coverage, and it has to be loss of qualified coverage, and I'm probably not going to get into details on what is qualified coverage, but we'll see. It depends on how the time flows in this show. But you have to be able to submit that proof before they'll say you can go through with it and complete the enrollment. You can submit your application. You can submit it for the 1st of the following month, And I said before, as long as we do it by the last day of the month, so like this month is June, I could submit an application to the Marketplace on June 30th for a July 1st effective date. But it's going to be technically in effect on July 1st, but it's not going to be active because the approval hasn't finished processing with the Marketplace. They give you 30 days to get that proof in. So it's 30 days from when you fill out the application. So it doesn't give you to the end of the following month to get that proof in. You still have to the end of that month to pay that first month's premium, but they only give you 30 days on that application to submit that proof. So if you get that proof after 35 days, then you'll have to do a new application requesting that the insurance start the first of the next month. So you definitely want to, if you know you're going to be leaving an employer or going to, as I mentioned, like PRN status, is see if you can get that letter from them immediately that coverage is going to end, so we can have that, and especially if we can submit it with your application when we do it, and everything should go through. We do have enough time right now. We're kind of in the middle of the month that if we get an application in and you can get that proof in, you should be ready to go on the first of the following month. But if we do it closer to the end of the month, there's just going to be that lag in the coverage. And again, that's when for loss of coverage. Now, I've got individuals that need new insurance because they turned 26 and they can no longer be on their parents' insurance. That's a life event, and we don't have to prove that they lost coverage because they turned 26 because obviously they had a birthday. Their birth date is on their application, so that's going to get approved. I've had one of those recently. We do still have the special enrollment for the Marketplace for people whose income is below 150% of the poverty line. I was able to get a family enrolled that way because otherwise, and it wasn't a loss of coverage situation, so this person was able to get their family insured based on the income amount. Now, there's rumors that special enrollment will go away, but currently that one is still in effect. So I think it takes legislation to end that, and it may be, and I'm not positive, there's some of the extra subsidies that sunset on December 31st, so they won't apply to the 2026 plans unless they are extended by legislation. It's not a matter of just canceling it, as they were put in that way with an expiration date. And, of course, that expiration date came after the election because that's the way they do it in politics, is if you're going to have something that's a big major change, you have it end after the election that you're hoping to be reelected for and not just before the election. So that's why it didn't affect our enrollment for this past open enrollment, because that was during the election time. So that's just kind of the facts of life when it comes to how legislation, especially with health insurance, goes to play. So we're coming up on our break, and we'll talk a little bit more about some other subjects for the under 65 market.
This is David Price, your local Twin Lakes business solutions consultant. At Twin Lakes, we're proud to have served the Upper Cumberland for over 70 years, helping local businesses stay connected with customized solutions like internet speeds up to 8 gig, Metro Ethernet, SIP trunks, phone systems, web hosting, and more. And it's all backed by local support you can count on. To learn about how Twin Lakes can help your business, call 528-2005 or visit twinlakes.net.
Got items you no longer need? Give them a new life at the Restore Donation Pop-Up Event. Saturday, June 14th from 10 a.m. to 12 p.m. at First National Bank in Sparta. Drop off your gently used items and support a great cause. Their donation truck will be there ready to go to receive your donations. And guess what? They'll be back every second Saturday of the month, so don't miss an opportunity to declutter and make a difference. June 14th, 10 until 2 at the First National Bank in Sparta with the Restore Donation Pop-Up Event.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, and we're back. Before the break there, I was talking about possibly taking advantage of a special enrollment for the Marketplace if you've lost qualifying coverage. We can still help, and also if your income would be considered below 150% of the poverty line, poverty level, I should say, you could qualify for a special enrollment to get a Marketplace plan. So don't think you can't get it now because it's not open enrollment. There are other ways that we can get people covered, and we do have other alternatives for health insurance. They might cost you a little bit more than Marketplace if you would qualify for a subsidy but just can't enroll right now. So, keep that in mind. I did mention, I think I mentioned a little bit before in the first segment, but I talked about the Canadian Med Store, which I primarily have targeted that, as a benefit to my Medicare clients because we used to have to deal with that infamous donut hole, as they called it. But under 65 clients can also use the Canadian Med Store. It's not a Medicare thing. It just primarily kind of seems to hit that market. But there are a lot of prescriptions that are really high that might not be covered by your plan, even some group plans. You don't have to be on the Marketplace. I can help people that have insurance from their employer. There are other things I can help you with. And one of those is, like I said, is a Canadian Med Store. You might be able to get some better costs on your prescriptions. I've mentioned a few times in this show I have what's called BAX RX. It's BAX RX. And I have a link that you can get that as a discount plan, discount program, I should say. There's a membership program that for like $30 a month, and you can get all your generics at no cost. There's a free membership that you can just use for discounts. And if you have the paid membership, you can still get some good substantial discounts on brand name drugs too. But it's all generics. And they give you a list of, I don't know how many, it's like 150 different generics that you can have it shipped directly to you, or you can go to the pharmacy to put in the code and you pay nothing at the pharmacy. So that can be a great help when it comes to prescriptions. As I mentioned on my previous show, I think it was, you can Google Canadian Med Store, or you can click the link that's on my website, or contact me to get information. But they do pay me a small referral if you use them. So if you give them a call, just tell them, hey, Matt Libby told me I should call the Canadian Med Store to get my Jardiance because he said you can save me a lot of money on it. And then they'll take care of you, and they'll send me a little check to say, hey, thanks, Matt. It's not a big deal, and it's not going to change how much you pay. So that's a great deal there. I've also talked a lot about long-term care and short-term care. Not a big fan of the traditional long-term care plans. There are plans that do have a return of premium option on those, but of course you're paying more than to have the return of premium. But the downfall of them being a use it or lose it proposition is if you pass away and didn't use your long-term care benefits, they say thank you very much for paying your insurance, but you didn't go on long-term care, so we're not refunding. It's kind of like with your car insurance. You pay for years on your car insurance, and then your car's paid off, and it gets totaled, and your insurance is going to buy you a new car because they're not covering full collision coverage on it, or they've depreciated it too. So kind of the same thing. You're paying for it, or like term life insurance, 10 or 20 years, and that 20 years is up, and congratulations, you didn't die. Thank you for what you spent every month. That's why I'm not a big fan of traditional long-term care insurance, but we do have plans with either annuities or life insurance with a long-term care rider. And the great thing with those plans are that they can be inherited. So if you don't use your long-term care, the money that you've put into that can be passed on either as a death benefit to your heirs, or in the case of an annuity, they can now own that annuity because you didn't use your benefits. Even if you were using some of your benefits, there's still some that can carry forward. So if you think that might be something to fit for you, let me know. I'm working with a company right now that offers we call MIGAs. They're multi-year guaranteed annuities, and one of the great things with those annuities are, we use the term zero is your hero, that they won't earn as much as, say, a traditional 401k where you're subject to whatever's happening in the stock market, that they're not going to pay you 25%, on your plan because the stock market climbed 25% that year. But the good news is if that's, but you have a cap, maybe it's 8%, maybe it's 12%. It's going to vary with the plans. So if you have a year where everything's earning a lot, you're going to hit, once you hit that cap, but you're going to earn that. But the beauty is you don't lose any money on an annuity because you might not earn at the same rate, but the beauty is they have a floor, which is typically 0. So if the market drops below, at a loss, you just don't earn. You don't earn anything, but you don't lose any of what you've previously earned as a percentage of growth and your base amount you put in. So that what you put in, you don't lose anything. So it's much more stable than having things like in a mutual fund. So that's something you might want to look at. Also mentioned the long-term care riders on these whole life plans. So they can be kind of a big chunk to front load on those if you look at it that way. Or with the annuity, you've got to be able to put the money in. An annuity, you have to have the money to go in. So one of the ways to do that is to roll over your 401k. And that usually happens at retirement time, but it doesn't have to be. You can do what's called an in-service distribution as long as you are 59 and a half or older. So you don't have to retire yet, but you could do that in-service distribution, pick up a plan that will give you that long-term care protection, but you now have an annuity or a whole life plan that lets you leave a legacy to your heirs. So that's what I'm saying. That actually does fit into coverage for under 65, and of course, anything like, especially on the whole life, your insurance cost is going to be less if you get that policy at a younger age. And there's different ways you can do them as a single premium. So like as I mentioned, with the rolling over a qualified plan, like out of your 401k, you may roll over 150, 100, 150, 200,000. And then that can start building cash value based on that amount. So whether you put that in an annuity or a whole life plan, or whole life plans, you can do a 10, 20, or pay to age 95. So there's a couple other things the way those, and it just sets that fee. So your premium never goes up. But if you're doing a pay 10, 20, or to 95, once you hit that range, so say you get the policy at 55 on a 10 pay, you're going to pay more per month, but after age 65, you're not paying anymore, and you still have that policy, and it does not decrease in value. Probably should still increase in value. Universal life plans, sometimes those can go down as you hit certain ages because the cash value is paying more of your insurance costs. The whole life plans do not go down in cash value. They may not be earning at the rate they were, but they don't. You've set that rate, and the actuaries figure that all in. So that kind of fits that. And then I mentioned the short-term care. I talked about this a couple weeks ago. And you can have long-term care, and you still might want a short-term care plan. The great news is they're not guaranteed issue, but they're practically guaranteed issue. So that's one of the issues I run into a lot of times with my clients for Medicare is they go, I don't have long-term care. Can we talk about that? And they've already told me, all their health conditions and the prescriptions they're taking. I'm kind of like, they're not getting long-term care. But a lot of times you can get those short-term care plans. And also, we've gone over your prescriptions. You're taking several prescriptions. All the short-term care plans that I represent have a prescription rebate built in. So you can have a great portion, and sometimes some people actually qualify to pay all their monthly premium on the rebate they get from filling their prescriptions. So it's not it doesn't pay for your prescriptions, but for each prescription you fill and you submit the receipts for, you get a rebate on that. And actually, and this is one of those times, a lot of times you save by getting a 3-month supply. It's per prescription filled. So if you got it filled for 3 months, that's one fill. So if you get it every month for 3 months, that's 3 different times you can submit. It's kind of weird how they do that, but it's based on how many times you fill a prescription, not how long that prescription is good for. But those short-term plans will pay for home health aid, which is not covered by Medicare. They'll pay extra for, say, you're getting physical therapy in the home. So these are ways to keep you in your home sooner. Some of them do have an elimination period, but you don't have to have. You can have it start on day one. It does make a little bit difference in the cost. But a lot of times on long-term care plans, you may have bought it to keep the price down as low as you could. If you do have a long-term care, you might have put a 6-month stipulation in there. And then now you're going to be using it. You go, oh, wow, that's a lot of money I'm going to have to spend for the next 6 months. Whereas if you have a short-term home health plan, you can access those benefits immediately and still have that going on your claim for your long-term care. But they'll cover those home health needs. There's so much per day, and then why they call it short-term care is because they're limited to like 360 or 365 days of benefits. But one of those things I learned recently is that 360 days of benefits is not 1 year. And I don't mean it because that's less than a year. It can be 2 or 3 years because it's days of benefits. So you could be doing it for, say, 3 days a week. It's going to last you, a year and a half to 2 years because you're not using the full 7 days of the benefit. The other beauty of those plans are if you go 180 days without using the benefit, your benefits will reset. So maybe you're using the benefits because it was post a surgery, like maybe you had a hip replacement and you're not staying in the skilled nursing facility. You want to recover at home, but you need help to be able to recover at home. You can claim on this plan. It will pay for those home health aids because you need help getting out of bed and getting in the bathroom. You're not able to cook for yourself because you can't stand at the stove right now, those kind of things. But you only need it for a short time duration. So maybe you're using a daily benefit, but you're only using 30 or 45 days of that benefit. And another 6 months after that, it resets and it starts over. You have another set of benefits. The other thing on the plans is they're very inexpensive. You can, like I said, they're very easy to get. You can't be like wheelchair bound. You can't be living in assisted living already. You can't have dementia. Any of those things. To get the plan. You could have cancer and they'll approve the plan. They just won't cover anything related to your cancer for the first 6 months. So they'll have a elimination period for those pre-existing conditions. That's why it's good for people who've waited and they're not healthy enough to get traditional hospital indemnity plan or long-term care plans. The other thing on that is you can build in like a hospital indemnity portion, or it could pay up to $300 per day that you're in the hospital for a few days. So that's something that you can get on one of those plans because you might not qualify for a traditional hospital indemnity plan. So if those are some things that you think might help you or help a loved one, give me a call. And again, a lot of plans I have to offer you can be on an employer plan and still take advantage of some of these plans I have. I always tell some of my clients that are leaving a group plan because they don't want to pay the health costs, but they want to keep their dental or vision benefits. Maybe their spouse is still there. And I encourage them to do that. I can't beat the rates of a dental or vision plan that's offered through a group plan. So, save some money, stay there. And as always, at Matt Libby Insurance, we can cover you from head to toe. It doesn't have to cost you an arm and a leg. Please go to insurancematchmaking.com and listen and like and subscribe and share the YouTube recordings of the previous shows. And we'll talk to you next week.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.